let's welcome Mr. Raamdeo Agrawal, Chairman and Co-founder of Motilal Oswal Group, joining us on the show right now. Raamdeo sir, thank you so much for your time. It's yet again great chatting with you. And Raamdeo sir, at ET Now, we are celebrating 16 years of our journey, and we want to thank you as well because you have been an integral part of our journey. Have always taken the time out to come on the channel and guide our viewers as well. So firstly, wanted to have your take on how you have seen the markets transitioning throughout these many years, and from here on, how do you see the market going ahead? Your first thoughts on that?
Yeah, thanks for this opportunity, and congratulations on 16 year of wonderful journey, and my best wishes for very prolonged, great future ahead. But coming back to your question about, see, actually markets have been, uh, markets have been actually very resilient if you look at a very long term, 10, 15, 17 years. It has been very predictable market, and we have been, in last 16 years, if you see, we have seen 2016 years means we are talking about something like post GFC, which is about 2008-9. So after that, only COVID has been one of the big breakdown. Otherwise, market has been very, very nice and scaling up. And from 2020 post-COVID, we are seeing virtual boom from 8-9,000 post-COVID COVID correction to now 24-25,000. So 3x in 5 years. So it's a very sustained rise, and it is very resilient. I mean, good thing is that not only it is rising, the corrections are very, very shallow. And so that is giving the confidence, even it is giving a lot more confidence to retail investors. And yeah, journey has been very good.
Ji, thank you very much. On behalf of first everybody from ET Now, you've been a big supporter of ET Now. You've been very accommodative with your time. You've been accommodative, especially at turning points. And you've always taken care of our interview requests. So on behalf of everyone from Team ET Now, our viewers, first, thank you very much for being a big supporter.
Yeah. So yes, now, so what is new here?
Well, new is that I'm again thanking you for being a supporter of ET Now. Like they always say that you should remember your friends on your birthday, seek blessing from elders and guidance from mentors and friends like you. आशीर्वाद ले रहे हैं जी.
नहीं, will. So I'm always there. If you have time to interview me, absolutely no issue.
अब जब बर्थडे होता है तो भी बड़े बुजुर्ग बर्थडे गिफ्ट भी लाते हैं. And the birthday gift for our viewers would be money making ideas from Raamdeo ji. अब आप बड़े बुजुर्ग हैं तो बर्थडे गिफ्ट तो बनता है.
हाँ, श्योर. अभी देखिए स्टॉक्स अपन बात नहीं कर सकते, लेकिन like so I was talking to some people, they're saying that market is dull, what do we do? So I said expect little lower return and get ready for a bigger return. If longer you wait for a low return, I think higher will be the return on the back end. So I think this is a time for a little patience. Today market is good, but generally I think all these geopolitical challenges, the patience is a lot more required whenever the external environment becomes hostile. So right now we are going through a slightly turbulent environment, and patience is the key. One should, a lot of people have come new in the system. Almost like 60-70% people are less than 5 years into the market. So I think they would have not, their patience will be tested for the first time. So they should be ready to provide that necessary patience, no return kind of a zone for some time, and then journey again starts. So my sincere request to all the new investors would be that they should be ready to provide that patience, which is the biggest fertilizer for long-term investing.
Raamdeo ji, in last 15 years, if I look at ballpark, like we say in Hindi, mota moti, gold and equity markets have given almost parallel returns. Now with gold, you've not done any hard work. You always had an advantage of liquidity. With equity markets in last 15 years, you've taken big knocks of volatility in COVID and then in 2013-14. So if gold has given returns which are almost equivalent to equities, what does that tell you? That which asset class will outperform going forward? Because gold has given you good returns without any stress. Equity has given you all kind of stress and has not given you great returns in 15 years.
No, but there has been a downdraft for the gold must be low. Of course, gold has done much better than I ever thought it will do. One is that there is no outperformance to further gold performance. If gold has done 15% or index has done 15%, I think I must have done at least 20%. So that 5% is not possible in gold. It's only possible in equities. And I mean, some of the guys might have done 25%, 30% also. That's not possible in gold unless you leverage and those kind of things. So yes, I mean, gold has outperformed my own wildest expectation, but and it has emerged globally also as very important bucket of value. So the people who believe in gold, of course, it's a good news to them. And right now it looks very what you call bullish. But I would not put anything onto the gold. I'm pretty comfortable. You know, one of the things which Mr. Buffett said is that do what you understand. You know, so I understand only equities, so I'm pretty good staying with equities.
Raamdeo, hi, afternoon. Always good having you today on the show. But, you know, I was telling someone today that when I met Raamdeo ji 3 years back on Diwali, he said capital markets is going to be that one structural story. And I was just, admiring the way that you actually pick up big trends in the market. While capital markets theme, Raamdeo ji, is not going anywhere in a hurry, hopefully so. But what are the other big trends that you foresee now emerging in the markets?
No, I still think capital market remains a big opportunity because it is asset light and it is very scalable. And the firms, particularly, the opportunity size is one. Second is the scalability within the what you call opportunity itself. Like if you look at the global asset management companies, now they don't talk in billions, they only talk in trillions. I mean, like there are $8 trillion, $10 trillion kind of a single asset management company. So those kind of as our AUM grows, we'll also see that 10-15% of the total AUM would be with one AMC. Like in India, out of 40 lakhs equities, I think SBI must be having almost like 7-8 lakh crores. So I think those kind of consolidated positions will be there on a much more enlarged asset base. So when asset base goes from 40 lakh crores to 400 lakh crores, I think these giants will have their due share in the larger pie also. So that kind of a capital market and capital market is very, I would say, at least to me, it looks like very smoothly compounding and scaling as the GDP of the country grows and the entire system remains intact. So the capital market opportunity still is a pretty large opportunity, and now markets have valued it also somewhat. When we talked about 3 years back, I think valuations were very cheap. Now I think people are realizing that, and it is showing up in the valuation. So less attractive opportunity than what it was 3 years back, but nevertheless, longer term that opportunity still stays pretty intact. But going to other segments, I think. If the oil price stabilizes about $65 or $60, I think all the OMCs which are there at currently available at literally one book or one and a half book, 10 times, 12 times for their size of the businesses, that seems to be kind of a great opportunity. And it is a very early trend, but let's see. I mean, the government also has to be supported in terms of policy making, but that looks to be a big trend out here.
So I'm using the nominal GDP as the benchmark here, Raamdeo ji, 11 to 12%. For next 3 years, which are the businesses? Because investing, like you always say, is buying a good business. Which are the businesses which will grow faster than the nominal GDP? Which are the businesses which will grow in and around the normal GDP? And which are the businesses, themes or sectors which will grow in single digit?
So, like the real estate looks to be real estate, defense, energy transitions, capital market. I mean, these are a few things which are coming immediately to my mind. They will grow at more like 20, 22%, 25%. Even banking on the whole, the kind of policy we are seeing, the regulator wants higher growth, credit growth rate. So if the 13-14%, if they go back to the trend credit growth rate, in that case, mid-sized banks, well-managed banks, they will grow at about 18-20% or more than that. So yes, I mean there are a whole lot of sectors who will definitely grow. I mean almost like 1.5 times of nominal GDP growth rates.
Theme, Ramdeo, which you've been extremely bullish on, is real estate, which you have always maintained that it's also a structural story. A lot of the positive is already in the price. The real estate sector is a well-discovered sector now. But do you think with RBI's push, with all that RBI is doing with regards to norms now on infra lending, etc. as well, this sector is here to stay and there's still money to be made?
I mean, you have to be selective what companies you buy because it's a very, very large sector and the companies have their own limitation in terms of execution. Every city has 2, 3 very large reality company. So, but then if you look at the whole country as you go from current $4 trillion GDP to $8 trillion or $20 trillion, I think the biggest game in town is going to be the real estate company. Anybody makes money anywhere in the stock market or anywhere. First thing they go is and splurge in buying a better house, good house and better house. If somebody has 2 bedroom, he'll go for 3 bedroom. He'll go for better locality. So I think real wealth effect of stock market and of the broader economy will be reflected in reality boom, and that is what we are witnessing. And I mean, it's just about 3, 4 years old kind of thing. Till about COVID, things were absolutely in dumps. Of course, they have come back from there, and a lot of companies are listed also, and a lot of companies are going to come up. But in this space, we'll find some unknown tier 3 company or tier 2 companies or small companies making big splash in next 5, 10 years.
You've been a big votary of these high growth businesses, especially the digital businesses.
Yeah, so that I forgot to tell, but that is one thing which is going to be across. I mean, there's going to be so many companies from the digital side. The way US market is looking today, that 8, 10 digital companies are kind of dominating the entire index movement or corporate profitability movement. I think those moments will also come maybe after 5, 7 years in terms of significance.
I always say, Raamdeo ji, that you need to figure out what is in the price, whether it is good news or bad news, whether it is good, whether it is earnings or whether it is compounding. So as we look into the future, and one has to look at next 12 to 18 months from a market standpoint, what is in the price and what is not in the price?
I mean, that is company-wise, Nikunj. You have to go very company-wide, listen to the story, eat, drinks, and spend time with them and understand the story. At that time, you are able to figure out, at least the way I go about doing it is spend a full day with the company. At the end of the day, you'll be able to figure out whether it is in the price or you are way above underlying value is more than the price or price is more than the value. That you will be able to figure out by spending full day with the company.
Talk about a theme where question marks have been raised about the viability and the future existence, and that's a good old IT services. Massive wealth creators, but given what is happening in AI, the maturity curve, the demand, do you think these stocks will continue to underperform and one should not call them as contra or value buyers at all?
I'm not too sure that world will go without IT services companies like Infosys, TCS, and all. But AI computing or what AI role, role of services companies will be changing for sure, and they have been changing right throughout from a complete body shopping in 90s to project implementation and now very large complex projects. And now the new angle which has come up is the AI computing. So how relevant they will be in this new, and they will be relevant. I don't have any doubts. The issue is, are their role going to go up, or they will go through a stagnancy process or some kind of a contraction also? Because IT budgets, in my own company, IT budgets are not going down. IT spend is continuing and it is always short. Your projects are not getting completed in time. So it's not that just AI is coming and eating away all the services. No, it's not happening in real life. Yes, there is some exciting development about the AI. Some of the things can be done faster, but I'm not the right person to pass a judgment. But I don't think it's a down and out kind of situation. No.
Well, Raamdeo ji, once again on behalf of everyone from ET Now, thank you. Thank you for your support. Thank you for your time. Thank you for your mentorship. And thank you for being part of ET Now, always on important days, on turning points. And thank you for that lovely birthday gift. You gave our viewers a lot of hints as to where the next big wealth creation idea could happen.
Thank you.
All right, let's take a break. Sometimes on the show you just want to extend our chat, and today was one of those conversations where you perhaps just wanted to say thoda aur. Time compulsions, but we have to take a break.